A recent report detailed in the LA Times shows how millions of dollars in welfare are ending up in the pockets of the bankers. Interesting. Now, this is, of course, in California. Now, basically, the report details about how much money was spent when it came to people on welfare accessing their money through using ATMs. Now, last year, $18.9 million, according to this report, was spent on ATM fees. Now, the year before, actually, they topped about $19.4 million. Now, I wanted to mention that because either less people are using ATMs or the welfare rolls are going down. As the economy gets incrementally better, you can definitely expect that that number continues to decrease. That's kind of a good thing, something that I wanted to note. Now, the state welfare system in California, like a lot of different places, gives people a card and they can withdraw money from this card at different ATMs, different stores, etc. Now, the thing about this and how banks are getting a hold of this is through ATM fees. Now, according to this article, the state welfare system allows people to make 4 different free withdrawals per month. So basically enough to pay 4 different bills. Okay. Now, but only at ATMs run by MoneyPass, which is a part of U.S. Bank. However, not everybody can get to a MoneyPass. California is pretty big, and Bank of America seems to have a very big presence there. Not only Bank of America, but banks such as Wells Fargo and JP Morgan Chase. Now, these are the places that have a $3 transaction fee. Now, anybody who's poor, anybody who's on welfare, that $3 kind of hurts. I know. How much does it hurt? Well, think of it this way. According to the State Department of Social Services, the average welfare recipient gets about $463 per month. Well, now wait a minute, you ask. Fox News tells me that people on welfare are living high on the hog, that they're living on very comfortable margins of welfare. They're getting so much that it disincentivizes them to work. Really, California, they get $463 per month. Now, I live in a small town. Things are a lot cheaper. That right there covers about 3/4 of my rent. Now, granted, we live in a pretty decent place. Still, $463 couldn't even pay rent for a 1-bedroom apartment in my area. Now, contrast that to San Francisco or Los Angeles, in which apartments, single-bedroom apartments, can cost somewhere around $1,000 to $1,800 in rent. $463 per month, the average welfare recipient gets. Not living high on the hog. And when you actually have to make a withdrawal of that money to pay some of that rent, no matter how much it is, well, you're getting slapped with an extra fee. And a lot of this, of course, has to do with availability of these different ATMs. Now, some stats on this. Now, 96% of California welfare recipients use electronic cards, half of whom paid ATM fees in January. Now, how much did these fees add up to for profit when it came to Bank of America? Well, according to the state statistics, Bank of America earned about $3.6 million from welfare transactions in 1 year. $3.6 million in bank fees, in transaction fees. Now, you think about this and say, well, why don't they just go to a bank? Why don't they just become a member of that bank and then they get free checking or whatever? Well, that's not an option that a lot of poor people have. There are a lot of banks that will discriminate against people who have bad credit and say, well, you can't bank with us. You have a bad credit rating. We won't let you open an account because we think that you'll overdraw based on your credit rating. And I've seen that happen before personally myself. And I know it also happens in other places. There's a lot of people who are underserved when it comes to the banking community. And sometimes the only way to get your benefits off your card when you need cash is to go to an ATM that slaps you with a fee every time you do it. So obviously, that's a bit of an issue when it comes to people who are welfare recipients. Also, it's an issue of taxpayer money. Now, people who believe in the welfare system, progressives like us, we want as much of that money, that taxpayer money, to go into the pockets of people who need it, right? So they can get their daily stuff, their supplies, they can pay their rent, they can get gas for their car and go to work. Yes, because a lot of people on welfare do work. That's one of the misconceptions, right? A lot of people need that money for gas, insurance, rent, food, clothing, housing, whatever, right? Energy, all that stuff. They need that money. They need as much of it as possible. And now you've got banks making a killing on your taxpayer money. They're taking your taxpayer money that has been allotted to someone else to help them survive. No, this is going to a banker. It's going right in their pocket. And they're going, They're making a killing off this. It really is amazing. Now, there was a California bill that would have stopped this. It would have restricted surcharges so that more of that money actually went to people who could use it instead of the bankers who were just getting fat off it. Well, that was shelved in 2011. Why? Lobbying, of course. The California Bankers Association had spent massively against this, and of course got the California legislature to shelf this bill, so they can keep getting their corporate welfare off of normal welfare. It really is kind of sickening the way that we continue to subsidize corporations in the form of corporate welfare, and it's just even it's a bigger level of sickness when they get it off welfare. They're getting their corporate welfare off regular welfare. And unfortunately, we've seen a lot of corporations do the same kind of practices, do the same kind of thing, manipulate laws that are meant for good intent and use it to line their own pockets. That's really sort of a huge, huge problem. Now, the state is trying to, since they can't get rid of those fees because they're blocked by the Bankers Association, there are certain programs that are pilot programs that are started of teaching people how to access or letting them know, hey, like these fees, don't go to places that have fees. Now, I don't think that will quite work because, as I mentioned, there's that whole access thing, okay? When you have more ATMs that belong to Bank of America, Wells Fargo, and others, instead of the ones that don't charge you a fee, well, you're going to run into that. You're definitely going to run into that a lot more. In fact, I have some of the numbers of how many different ATMs. And this is, so 2,500 MoneyPass ATMs exist in California. Now, remember how big California is, right? There's only 2,500 compared to 4,800 run by JP Morgan Chase and 3,800 run by Bank of America, all that charge welfare recipients lots and lots of fees. So, once again, it's a matter of access, and hopefully they can change this. They have an opportunity next year to address this issue when the current contract kind of expires, right? Current contract will expire next year. If they don't get opposition from these different bankers groups, or if they can overcome that, maybe they can do a system where, hey, we're not going to give banks welfare money, and this money can go to the people who need it the most, who can use every single dollar.